Hello and welcome to Upside, where every week we look behind the headlines that are going to affect European venture. Today it is Mads, myself, and we have a special guest. I'm going to introduce him in a second. And today, what are we talking about? We have why Micron matters. Can the UK unlock more capital? I hope so. Euro defense attracts billions. The AI invoice is now due. Everywhere you look, it's sovereign AI. What's going on in the week ahead? Some predictions and deals of the week. Now, Neil Shah, thank you so much for joining us. He is our super special guest. Neil is the head of tech sector coverage for the London Stock Exchange. 20 years in tech investment banking before joining the exchange in 50 plus tech IPOs under his belt. Personable, founder-facing, quotable, on the record stating the tide is turning on London listings. Neil, tell us more about the tide and how are you?
I'm great, Dan. I'll try and match your energy. It's Friday morning. It's been a long week.
And I imagine you're melting. I'm sat here in my pants with ice cubes. It is hot. Are you okay, my good man?
I'm okay. I've got my colleague Mohan over from Mumbai. He's laughing at me.
Oh, yeah, he's like, whatever.
Calling me an artificial Indian because I can't hack this heat.
Yeah, what are you talking about? This is a balmy spring day. What are you talking about?
There you go. So I think the tide is turning. We've probably got the strongest pipeline that we've had in about 2 decades. And there's been a lot of assets that try to come to market post-21 that have not been able to. Now, I think everyone thought that 2026 was going to be the year, aside of geopolitics, where we sort of got back to normal. We're starting to see that in private markets. We've seen some humongous deals. Hopefully, we'll see some IPOs pick up in the second half. We've had 7 companies IPO in the first half, but loads of inquiries. If I just take the last week, Dan and Mads, there's probably been 10 or so inquiries across AIM, our junior market, and the main market businesses, large and small. We've got companies on NYSE that are valued at $4 billion, have just seen SpaceX happen and are wondering if they're going to continue to see the love in the US markets. Whereas in London, that's a big deal. That's a FTSE 250 company. So we'd love to entertain more companies like this.
Great. Well, we're going to talk a bit more about IPOs, and I'd love to get your insight more generally into the tech space, because that's your jam in Publix from the kind of the top view. But we're going to come onto that later, where I did want to just kind of do a mini broad market / economy update. I think no great surprise to anybody. We've seen a pretty volatile week in US tech. FTSE relatively untouched at 10.5. Obviously a very different game over here. Neil, I'm going to come back to you on that and see if you have any thoughts. In the US, S&P and the Nasdaq 100 were down, with mostly AI infrastructure taking the kicking. As an example, Cerebras now trading below IPO. And everybody, again, will have seen this. SpaceX, the cautionary tale. At time of press, might be bouncing around. It's Friday the 26th. SpaceX was hovering around 150, down from its 225 peak. Now looking to sell a $25 billion bond. Now, I'm assuming this could accelerate the Tesla merger, but we'll see. But for now, they are doing very well, becoming an NVIDIA reseller. Talking about AI bubbles, but not talking about AI bubbles. The Shiller PE ratio is almost in .com territory. We've never seen that before in history. So that's going to be fun to watch. Some fun IPO facts for you. Roughly 1,600 unicorns in the world. Half in the States, where one is minted every 2 days. 58 European IPOs so far in 26 versus 112 in the whole of 25. So not much change across Europe this year so far. And we're going to talk more about IPOs later in the show. Gents, any thoughts on that kind of mini update before we move on to Micron? Because I want to talk about one of the movers and shakers that is bucking everything. Neil, anything from you? Do you have any fun IPO facts from your time, or anything you want to highlight?
Let's go back to that Ben Graham quote, right? That in the short run, the markets are a voting machine, and if you're in space, if you're in AI, if you're in quantum, if you're in cyber, just after the Mythos news, is a fantastic place to be. I think we've got to really wait a couple of years to see whether or not this is peak froth. I remember when YouTube was sold and everyone thought that it was a really toppy price, and then we saw a WhatsApp and the same thing, and when Google floated, there's all those questions: are we at peak bubble? And here we are. I do think AI is transformational. I really hope we get some data centers in space to solve our energy needs, for one, which is part of this SpaceX narrative. So I'm a secret ball here, and I think SpaceX is too big a deal for Elon to just let it fade. So I hope it holds up, which is good news for Britain, because any old unicorn, any average unicorn, go public on our markets.
We will. We're going to tussle this one out another time. But yeah, I'm not a massive Elon fan. I think he's really he's riding the shark now. We were talking about this yesterday. I was like, Micron, okay, they're done well, but you have a very particular point as to why Micron, the memory maker, is important. Not affected by volatility. Stock up 17% on bumper earnings. Gross margins now in the 85% bracket. But Mads, why is this important? Why was this first up on the docket?
Depends who you're asking. For the average consumer might not care much about Micron, but many of them will care about Apple. And I don't know if you saw that Apple took a bit of a beating yesterday. The reason they took a beating is because they've just said that they've had to increase prices, not by a little bit, but by 20%. And why? Because of cost increases of memory and storage. And so what is that? Well, that's Micron, and that's all the stuff we're talking about. Now, if we look back over the last year, the S&P 500, the world's most important stock market index, well, after the FTSE 100, of course, Neil, the second most important, let's say, is up 21%. The NASDAQ 100, the big tech companies, up 32%, and it's all on AI. It's AI, AI, AI. And we've gone through the Trump wars, the oil shock, inflation, low growth, the whole works. Yeah. But as long as there's belief that the AI train keeps rolling, the markets will keep humming. And in the past week, markets, they've had concerns. NVIDIA's been down 5%. They're now below $200 a share. Why? Because there are concerns that AI growth is topping out. And sentiment has soured this week. As you said, SpaceX under $2 trillion, Cerebras under the IPO price. The Fed had a hawkish flip. And so why is Micron important in all of this? Because they make the high bandwidth memory that goes into all the GPUs. And that memory is really, really precious, and it's really, really expensive. And there are only 3 companies globally that can make it. And so when we know how well Micron is doing, that gives us an indication of how well the whole AI economy is doing. And so Micron is the only firm reporting earnings right now. The others are not until Q3. So if we want to know what's happening right now in AI land, not the forecast of the speculation, but the actual numbers, Micron earnings are telling us that. And guess what? They had, as you said, a bumper quarter. Revenue was up 346% year on year, 74% quarter on quarter. It's absolutely phenomenal. Gross margins, almost 85%. Now, 85%, that's some software type.
Software margins, right? That's sassy.
That's sassy, right?
Yeah.
So they've done extremely well. And so Micron had a great quarter, and that they walked in and sort of steadied markets a little bit. Now, so far, so good. Friday's not over yet. It's not a victory lap. But the blowout demand absolutely tell us that the AI economy is alive and well. They've got more than $100 billion in long-term agreements. Customers are paying in advance. It is so hard to secure this stuff. They've taken $22 billion in deposits just to lock down supply. Yeah. Their capacity is completely sold out for the rest of the year. They can only fill from half to 2/3 of demand. They're committed 18 months out, okay? So this is a really, really interesting signal. Now, you could say it's still to some extent lagging in the sense that when you see earnings that tell us what's happened in the last quarter, and you could say the real forward-looking signal is the hyperscaler CapEx guidance. But the Micron earnings and the memory makers earnings is absolutely the canary in the coal mine. Or the lie detector, you could say, because they're the ones saying, people might be saying they're spending, but are they actually spending? And right now they are actually spending. So the memory says that we're still building, CapEx is still rolling, the AI train is still going. The question is, what's next, and can everybody keep it up?
Neil, I want to talk about capital markets and UK capital flows, but before we do that, any thoughts on Micron or anything that you see from maybe a different lens?
Look at that share price. Rarely have we seen an L-shaped share price. No one ever wanted to be a hardware banker in my time in banking, because it's just so volatile, and you're beholden to the semiconductor cycle. And who would have thought we would have, a $1.4 trillion memory business in the market? I think it's a great time to be in picks and shovels. You look at IQE in South Wales that makes compound semiconductor wafers, assembling 300 layers of gallium arsenide and silicon carbide. And we're a world leader in this space, including photonics. And if you look at IQE share price, it's gone from like 5p to I think 56p at the peak. Is just below 50p currently. But that's been on a bit of a tear, like Micron, because if you're a semis designer, a manufacturer, you just can't get hold of the materials. You're building PCBs, you can't get hold of the laminates. So there's, I think, multiple ways in which people can play this AI train. You don't have to just try and get hold of some secondary shares in one of the frontier models.
I want to talk to you. I want to bring you in, Neil, especially all over this one, because we obviously a topic close to all of our hearts. Everybody listening, I'm sure the same, wanting to know how we unlock capital markets, not only across Europe, but here in the UK. So I'd like to explore a bit of a kind of a general view. We are looking at yet another change at number 10, the 7th Prime Minister in 10 years. It's been 10 years since Brexit. We've heard many stories over the last few years about unlocking pension capital and the Mansion House Compact and what's going to come into private markets. We've seen Labour, oddly, I think, actually invest a lot more than Rishi under the Tories was promising, which I think generally is a good thing, although you could argue, where was it being invested and where is the money coming from? But again, a conversation for another time. But Neil, maybe to start with, can you give us a little kind of history lesson at the exchange and set the scene, maybe from your perspective, about tech and how you view the world with regards to capital markets? And then I'd like to bounce around with some questions around maybe Pisces and some of the other initiatives that you're running.
Absolutely, Dan. I'm going to quote my friend Saul Klein at Local Globe, who says that we've achieved so much in the UK, and it's in spite of all the challenges, all the roadblocks put in front of us. And I think capital markets is no different. Since I joined the stock exchange in 2020, we've had 50 plus tech IPOs. I think we would all love more, but that's happened in spite of the fact that our pension funds, our insurance funds, retail investors don't really invest in the stock market, right? So just imagine if they did. If we wind back to 1997, I think 53% of UK pensions AUM flowed into the stock market. Today is about 2.8%. Mads and I were at the UK Private Capital Summit recently chatting about this stuff. In venture, it's even more stark. I think it's about 0.8%. So it's not going to take much to create a wall of money from the UK to participate in these deals. Now, if you're a founder, you're going to get funded anyway, because there's a wall of money from America looking for what they believe to be earlier, cheaper equities. So you're going to get funded, but who really misses out are UK savers in all of this. People like us with pension plans where, and unfortunately, I think a lot of it, like 70% of the US market is just tracking the S&P. So good luck to those funds seeking alpha. But I think there's a lot of potential. And just in the last year, we've seen a lot of inquiries going to have some pretty large tech IPOs. I'm pretty sure they'll be well received. You look at how well Sage is holding up as one of our largest tech companies, £2.5 billion of revenue, trades in line and sometimes at a premium to its closest peer in the States. So there's no reason you can't get good support here. But I would love to see, 15-20% allocation back to the public markets. And I think this is what the Mansion House Compact tried to do. It's a voluntary compact of some of the largest DC fund providers in the UK that was topped up by the Mansion House Accords, which extended the number. And then we had the pensions bill put through Parliament, which really showed intent, where government had the power to effectively mandate, should they so wish, in investment in the UK. Hopefully you don't need to go there. But that is a really good signal. We're starting to see some capital flow, particularly in private markets, but I want to see that replicated in public markets and at scale. a 200 million pound British growth partnership is fantastic. We've seen investment in companies like Wave and Kraken. I think that fund probably needs to be about 20 billion for it to start making real impact.
It feels like there are lots of initiatives. It feels like we are in a period of inertia where initiatives launched. Okay, some of them might be slightly slow off the block. I would argue I'd put the Mansion House in that. But it feels like there is a lot of kind of backlog to come through with regards to activity. Is there anything that our listeners won't know? I mean, I'm not sure they would have heard of Pisces, for example, but are there any other initiatives or any other schemes that that are also coming through that maybe not be so well talked about in the press?
Absolutely. I was at a drinks party with a bunch of fund managers on Wednesday who were unaware that we've got a consultation on our AIM market, our junior market, which completes next week, which is going to reset AIM and make it a lot easier to be a company on our junior market. The same sort of thing applies to our main market. We've had a whole bunch of reforms, but singularly, they don't make a significant impact. But as a package, there's a lot there. And we're starting to see companies take advantage of this. Pisces as well, which is our private securities market, which effectively allows a private company to go public for a day and allows trading that's free of stamp duty for buyers. And if you're an employee in an EMI or a CSOP plan, there's a significant tax saving there. We've had one transaction in March. We're going to see a few more deals in July. Hopefully by the time this podcast goes public, you may even see some more announcements. So a lot of activity there. And what we're trying to do at the stock exchange is be agnostic as to whether a company is public or private. We want to help these companies scale. If they need liquidity and a pressure release valve, we don't want to force them into a premature sale or an IPO. They could use Pisces should they so wish. But some companies have benefited from that IPO. You look at Pension B, floated with about £6.3 million of revenue. It's a £50 million business today. Romy Savova, CEO, owns 32% of the company, all in ordinary shares. That's worth at least £100 million. Where in the world can you achieve that sort of success? And so I think it's really important for us to offer this range of flexibility, early flotations, later flotations for those who want it, and for those companies that want to stay private for a little bit longer, we've got Pisces too.
Are we just bad at talking about it and sharing the wins and understanding how it works here, or is there so much oxygen being sucked out of the system by the Americans that we just don't? Where are the breaks in the chain, do you think?
It's a bit of both, Dan. That we definitely need to shout about our winners a little bit more. We've got businesses like Craneware, founded by Keith Nielsen, started in 2007 with $50 million of revenue on our market, $200 million of revenue today. The entire market is US hospitals. And that's an underappreciated story that we want to be shouting a little bit more about. And one of probably about 30 stories that I could give you from our markets that are just not as well known as some of the companies that didn't work out. And you see that on any market. So what you're going to see from us is a little bit more promotion of public and private markets. We're in 19 train stations as part of a campaign to highlight some of these stories and just create some brand recognition. So if you're Burberry or LNG or I don't know, Revolut, you just got your banking license. We'd love to have you up on our screens talking about what you've been doing. I think for as long as I can remember, we've always looked up to the US, and I think there's a lot of things to appreciate about the American market. But I think we're getting our mojo back and realizing that we can build in the UK. We can stay here if we want to. Yes, it's bloody hard, and there's a few things we can do to make that easier. We're trying to do our level best at the stock exchange, where we don't set the rules as to what the companies need to look like to come onto our market. We don't tell fund managers what they need to buy. Yet when things don't work, we get blamed for all of it. So we could have sat back and said, "It's not us, folks," or just lean in, which has been my CEO's mantra. That Dave G. Hoggett wants to make the UK the best possible place for founders like you and Mads also to start, grow, scale, and stay. Should you so wish.
What I'm going to put you on the spot, but please tell me to go away. What one thing what one thing would you do to unlock capital flow in the UK?
Pensions. If there was a silver bullet, this is it. And I think that government can go so far, but actually corporates have a lot of agency as well. We do as individuals too. One of the things that we've been asked for at the stock exchange is, for every corporation in the UK, give your employees a choice, the status quo or a plan that's more aligned to the UK. And if we start doing that and having more LP money flow into VCs like Superseed, like our public funds, like Premier Micron, and others, I think a lot of these problems will get unlocked. So that's the main ask, and just more risk appetite. I wrote my first angel check in about 10 years, 2 weeks ago, and I think more of us can be doing that. And just not being lazy. My eldest son's 14. I stupidly invested in a cash ISA, which got to about 20 grand after about 14 years of investment. Boy, did I wish I'd invested in the stock market.
This is not investment advice. Just I want to change gears slightly. I want to go broader across Europe and look at the defense tech push, because there's a lot of stories this week about a lot of cash flowing into defense tech. We got tank maker KNDS. They're doing a 12 to 15 billion euro listing in dual listing actually in Frankfurt and Paris. Drone maker Stark raised 500 mil from Peter Thiel and Sequoia at a 3.5 billion euro valuation. And the EIC is now looking to do direct equity into defense. Looking behind the curtain a little, it looks like they always did. They were doing a lot of dual use, but now the paperwork matches and they can do pure defense. So Mads, set the scene, give us the inside scoop. And then what I'd really want to know, and I'm sure many of our listeners would too, is how long is this defense push going to last?
Well, it's certainly going to last for a while. We've sort of been collecting the peace dividend in Europe for decades and massively underinvested. So there's a lot of investment that now is needed for us to scale up our defense and make sure we can defend the continent. Now, that said, obviously there's been a lot of nice political talk about what should happen, yet we know that it was difficult for us in the UK even to unlock a few extra £1 billion to meet sort of the, not overly ambitious investment plans of the previous Minister of Defense. So I think, look, the expectation is that Europe will rearm. The expectation is that will flow into investment and that we'll be building more defense companies in Europe, and that is something that's going to be a secular trend over the next decade. But of course, there's going to be a political willingness to make sure it can be funded.
Anything that you wanted to highlight here specifically on the European defense tech push before I bring Neil in?
Look, it's a broad question. I mean, there's so many vectors you can take. People are talking about supply chains and supply chain worries and the dependence on China for some of the things we need. What's actually really encouraging is the manufacturing boom we're seeing at the coalface here in Europe. We see founders starting out, creating manufacturing companies, technology companies that look for ways to make the things we need to make it as complete a supply chain as possible. Yes, there are still things we're missing. There's some of the rare earths and some of the other elements, but increasingly we see more and more focus on being able to do and make things in Europe. Some of this stuff is really inextricably linked. We talked about kind of at the top of the segment, one of the issues we have right now is it's very, very hot in Europe and in the UK. And for 20 years, we've had a war against air conditioning, and it's sort of been
Yes, we have.
no, but it's been absolutely bonkers, right? And there are even rules in London saying that for climate change reasons you should just use natural ventilation. But natural ventilation when it's 35 degrees outside is pretty useless. So of course people should be allowed to have air conditioning and not have it torn from their homes. Now, with those same reasons, we have stopped or curtailed the drilling of oil, and we have pushed up energy prices, and this is part of what has pushed manufacturing offshore. And so all these things connect, right? It's when we are making the wrong decisions for whatever virtue signaling reasons or whatever. Yes, of course, climate change is important, but I think we've had a bit of a God complex in the UK, believing that if only we were ski-tick enough to close our industries and stop drilling oil, we could solve climate change on our own. And of course we can't. And for us to then say, well, listen, we should sort of stop the economy and we shouldn't let people have AC when they melt and all that stuff because that makes us feel better. That's absolutely nonsense. Now, that's not to say there isn't a use for regulation and for tax. A carbon tax plus kind of the carbon border adjustment mechanism can be really sensible, but that's just not what we've done. And we've done stuff that has, really targeted our industry in bad ways. And so back to defense and sovereignty and all the things you were picking up on, because I do think it all comes back there. Yes, there is definitely a change right now and a shift. The challenge we have, and this is right back to the political turmoil you talked about, is that we're still seeing too much political intransigence. We're still seeing, ministers block, for example, the exploration and exploitation of the North Sea oil resources at a time when it's exactly the opposite we should be doing. So that's how I see the dots connect right now.
Neil, are you seeing any specific activity around defense, resilience, sovereign? Are you getting more inbounds on that basis, do you think?
Definitely. I think war is a colossal waste of everyone's time, but it's been a feature of humanity since the start of civilization. And I think historically wars have been conducted on foreign lands, slightly away from the UK. The current situation feels so much closer when we've got Russian subs surrounding the UK, companies involved in dual use. And I think investors have looked at this and realized that it's inevitable. They've got to get involved. Some have been a little bit more willing than others, but generally there's a lot greater support, and you're seeing that play out in some of the demand for some of these IPOs, including CSG earlier this year in Amsterdam. I think all of these companies are going to get good support, folks. I think we're seeing more supply, probably in continental Europe, where there's just been a stronger industrial strategy to build defense primes. We're not seeing the emergence of those just yet in the UK, but there's a ton of dual use companies. Some on the market, some coming, and a lot of interest around Sov AI. And I thought that the government's push there was very timely indeed, recognizing that there's no time like the present to be investing in our own capabilities. We can't be reliant on partners for single use. We've got to have a backup, and we're a better place than the UK.
I've got a stupid question for you. How competitive or how closely do you work with other European exchanges? How does it work behind the scenes? Are you kind of fighting for deals? Do you do deals like, we've got the Frankfurt Paris dual listing. How does it actually work behind the scenes when there are only so many companies going public?
I guess it's a bit like VCs that everyone wants to take their fair share of the deal, and I think if any exchange could do a prime listing, that would be favored. But I think we play pretty nicely with our neighbors. Definitely in emerging markets. So if you look at Astana in Kazakhstan, or some of the African exchanges, you'll find a number of companies which are dual listed in London. With the continent, less so, because I guess if you're a French business and you can go Paris, and if you go an IPO in Paris, why would you bother with London unless there's a very valid reason? We had Canal Plus dual list, so it's certainly possible. We've had Danish companies like Trustpilot use London, and look, we're here to do what's best in the interest of the company. If they want to maximize local demand, and liquidity is not going to be so fragmented across two exchanges because the company's got some heft, maybe a dual listing makes sense. But I think it makes less sense where you've got a sub $10 million business that's thinking about dual listing between us and the US. There you're probably better off starting in London, where at least you're going to be a somebody on day one in an index, versus a bit of a nobody until you cross about 25-30 billion in the States.
Let's move sideways. I want to talk about AI. No great surprise there. I want to talk about the cost of AI. A number of stories this week coming into the news cycle about how companies are thinking about spend, where spend is going, spend being blocked on DC in the States. For 3 years, effectively, the AI story has been spent, get amongst it. And I still sense that many organizations of any size are in the experimentation phase. They're playing with Anthropic, ChatGPT. They're working out how all these things fit together. Neil, actually, before I carry on, how can you use AI toolkits? Does the LSE, what do you guys use behind the scenes? Are there any stories there?
Sure. So me personally, I've got Copilot and pretty much free access to that, and I can use it for all sorts of things. And I've also got access to Claude on a more restricted basis. Claude has a connector to our workspace data, so that's fantastic for me. It means that I don't need to memorize a whole bunch of codes to pull share prices and do analysis. I can just use a prompt to save me a ton of work, or save my analysts a ton of work. So definitely seeing the upside there. But I'm always looking over my shoulders, see what's happening in VC and founder world, where you guys get to use cool tools like Granola to record meetings and things. And boy, do I wish I had access to some of these tools. But no, that's part of the challenge, right, with enterprises.
Yeah, as I was asking the question, I knew there obviously, extremely secure environment. You're going to be restricted, but also you can't not. Yeah. So it's great. I mean, Copilot, not a massive fan, but so what? At least you're amongst it. Just to unpack the whole AI spend cost piece, 3 news items that caught my eye this week. Qualcomm, the phone chip company, unveiled a data center processor on Wednesday, naming Meta as its first customer. So it's not the Chinese after NVIDIA's market, or just the Chinese after them, although the chips don't ship until 28. And their cute move was to invest in the software layer, investing $4 billion in a software firm to crack NVIDIA's what I would call the real moat, the software. On the data center side, I don't know if you guys saw this, but there are 300 bans over in the States, or moratoriums on data centers across the US. The bottleneck is no longer the model. It's now planning, water, energy, land, and getting through the whole process. And we're yet to see how that's going to pan out over there. And I know that we're going to have similar challenges across Europe. Enterprises are now negotiating their AI bills down. The price of intelligence is deflating, you could argue. And we've got the added looming story of open source, open weight models looming large. And personally, I think this is something to look out for, how enterprise and large orgs are going to start looking at what they bring on-prem, what they bring in-house, and how they then lean on the frontiers as a supplement rather than the core service. So I would argue, as the price of tokens is coming down, this is where Europe can step in at the application layer. Mads, do you agree, disagree? Where would you take this one?
Look, I think it's tempting to say that when inference becomes cheap, that's Europe's moment, but I think that has it maybe a little bit backwards, because cheap inference is everybody's input. So I don't think that's nothing that confers a specific strategic advantage for us. I think for us to win, we have to make the best products, not just rely on cheap tokens. And the harder, maybe better question is, what does it take to make great products? And I think, to Neil's point, to your point, I mean, we've seen some phenomenal businesses being built right now. And that's what we have to do. There's no shortcut. We have to work hard, and the founders and the ecosystem has to work hard to build incredible businesses, and that's exactly what we're all doing. And and I think the cheap inference is just a kind of a macro condition that will benefit everybody in the application layer in that sense. And that sort of goes to something we've been talking about for a long time, which is, ultimately value. A lot of the value will accrue to applications. The cost of tokens come down. We've talked about Anthropic, and if the cost of 1 million tokens goes from $15 to 50 cents, well, you need to 30x the number of tokens just to stand still. Now, tokens are growing very, very rapidly. We have seen some variability in pricing, but consumption is still growing so rapidly that revenue, of course, is exploding. And actually in Q1, we saw the revenue from the AI economy exceed the depreciation on the CapEx, right? So, of course, there's a cash drain still, there's cash outflow because you're buying there's all the GPUs and all the data centers up front and installing them. But if you then look at the depreciated cost, well, there is, it's profitable. Now, the bigger point is what's going to happen here going forward. And I think just being an AI lab, just being a model lab on its own is a brutal business. There is a commoditization. The open weight models coming out of China are formidable. And so power will accrue to the ones building the best products on top. And we've seen even the frontier labs doing that. I mean, Anthropic have been super active in turning the model supremacy into application supremacy and dominance across different verticals. So all very, very exciting to see play out.
Yeah, I think it's hard for the UK and Europe to outspend the US and China in this race. So we've got to be smart. I was at an applied AI summit last Monday where you had Sir Liam Fox writing his new book, The Coming Storm: Why Water Will Rewrite the 21st Century. And back to that story about Micron, water, energy are really important in this equation. And I think that's got to be front of mind for politicians, thinking about how we can create the best possible environment for those building here to do so, and to look at how we can support this industry, where the constraints are going to be, and also what the long-term impacts are going to be as well. If we're taking water away from other uses to build data centers, that creates all sorts of problems. So how this feeds into planning is so important too.
Yeah, I think that all of it is going to be challenging everywhere on the globe, but I think that the planning piece here, I think, is especially going to be challenging. Need to get through the NIMBYs. Well, let's stay on the political side and on the sovereign AI, because there were, again, lots of stories in the news cycle this week about sovereign AI. We saw 2 weeks ago, Washington stopped Anthropic and switched off its two most powerful models, Fable and Mythos, still in the dark. Did you guys see the website is fable5up.com? I thought that was quite cute. It's just a big no on a page, and then you hit refresh. I think that was, somebody had to do it. I thought it was quite cute. On Monday, the Five Eyes spy agencies named the same models and warned the AI is able to overthrow a nation's cyber defenses in months, not years. I'm sure that'll even come down to weeks. We also saw the Dutch trade minister this week. He flew out to Washington to fight the Match Act, which is stopping ASML, the only firm that makes the machines advanced enough to make the kind of chips. So he's gone to see Lutnick and talk about how they can sell more kit to China and not be part or be restricted by the Match Act. Don't know how that's going to land. Brussels, I saw. So last week we saw a story of up in arms about certain language being used in EU, and the French saying this model needs this language and that language set needs to live here. Partly on the same topic, an Italian startup, Domin, they've been given the job of building Europe's own frontier model, open source, 400 billion parameters, 24 languages. Good. Everyone will be happy on European supercomputers. So again, we'll see what happens there. So Mads, tee this one up for us. Who's making moves? Who's winning and losing on the sovereign front?
Well, I think you've already teed it up well, Dan. We talked about Mythos, we talked about switching off things, and then there's this notion that we can create sort of a single European champion to have some sovereign defense. I'm just not sure that's the best model. I mean, I think if there's any lesson from this, it's not to be dependent on one vendor. So I'd rather let 1,000 flowers bloom, or a dozen, or whatever we can get to. And actually, although I applaud the idea to get more European AI models built, I think the Damin model is exactly the wrong approach. I don't think the kind of government should, or select winners, or play it at being VCs, and not because I think they'll be good at it, because I think they won't be good at it. So it's not so much fearing the competition; it's more that I just fear it'll be wasted money. I think a much better way to do it is to run procurement competitions or other types of competitions where you award contracts. And why not award multiple, right? We could say we could buy services from 3 or 4 or 5 different vendors, and then let the market go out and fund those and back those, and let VCs invest in them in the way where you let capitalism do what capitalism is best at.
Well, that's what the Chinese have done for decades, haven't they?
That is precisely what they are doing.
Such a winning model.
Yep, I think it's much smarter. So I think it's a little bit the same instinct as defense. The state should be a customer, as opposed to sort of fund its own labs or its own industries.
Yeah, Neil, we're going to talk a little bit more about the specific Mythos blackouts in a sec. But anything that you would pick up on this kind of sovereign AI piece?
Brilliant, Mads. Let 1,000 flowers bloom. And it's great to see that for the first time in a long time, the UK government has stepped up as a customer. We saw a contract being awarded to Quantexa recently. We've seen Synthesia break through into the government. We're trying to help connect founders and CEOs with enterprise CIOs, CISOs across the FTSE. It's a great time to be in cyber as well, given the fallout from some of these models and potential risks. And I was just looking at Palo Alto and CrowdStrike share prices before this podcast, which also looked like a bit of a hockey stick. In the UK, after the sale of Avast, Sophos, Dartrace, there are very few places where you can play this trend. So, if you're building a cyber company, you've got to seriously look at public markets, where I think there's a lot of pent-up demand to help enterprises solve these challenges.
Yeah, and I totally agree. Mads, last on the docket, we got Anthropic and Mythos. Where did you want to take this one?
So, I mean, you've just had the nice side up here is Fable back up, and it's not. And the reason it's not up is not because the U.S. government has said it should be taken down for everybody, but it's sort of said it should be taken down for everybody who is not a U.S. citizen, including employees of Anthropic that are not U.S. citizens. And they just said we can't manage that today. We don't have a way to distinguish down to that level in real time. And so what's happened here over the course of the last week is that a new policy has been released on Anthropic's website that says that from the 8th of July, they can demand government ID, date of birth, facial, biometric scan, things to identify users. And so the expectation, or at least speculation, is that these ID checks could be a way back for US users, because of course Anthropic is really, really eager to get to tech in the hand of at least the people they can get it in the hand of as soon as possible. What that means for the rest of us, time will tell. Maybe we can get a special deal again. Maybe we need to send the next prime
American.
Or send the next prime minister, wherever he may be, to Washington with a letter from the king begging for access to the good stuff.
He loves those, isn't he? He's a bugger for a gold disc and a letter from a king.
Or we could ask Hussein Kasai to build on Fido 2.0 to help create some fake IDs for us so we can benefit from these models as well.
Yeah, there we go. If only there was a model powerful enough to stop that. I've got one prediction which I think is a bit lightweight, but I'm going to go for it anyway, which is SpaceX is going to be 120 by the end of the year. I think it's going to halve in value by the end of the year. Before picking up next. That's my prediction. Anyone got any predictions before we move on to deal of the week, which I think is also mine? Neil, stick your head out. Go on, go for it.
We're pure self-interest here. I hope it doesn't go to 120 because I'll be doing any IPOs this year a little bit harder. I think we want people to make lots of money from these IPOs so they can recycle them into new ones.
Yeah, no, fair. And obviously lots of our LPs are in all over the world, public markets. And yes, we want all of that good recycling to come around in the system. I saw this week, deal of the week for me was not 1, but 10. It was the British Business Bank backing 10 first-time UK VCs. Not always for the electorate, not always a comfortable thing for many people in the street to see government money being spent and invested in venture and going into startups. But I think the counter to that is that we need this innovation and we need this flow of capital into these new incredible businesses that are going to make the wonderful things that we touch and make our lives better on a daily basis. So obviously I'm going to talk my own book. Obviously I'm going to be happy about this, but I think it's just wonderful. There are all these initiatives going on and I wish all 10 funds absolute rip-roaring success. Mads, what's happening in the week ahead? You've got some things looming, Bending Spoons et al.
Exactly. So maybe Neil just missed it narrowly because Bending Spoons is IPOing on the other side of the Atlantic. Neil will get the next $19 to $20 billion valuation. It's an Italian champion of tech. I don't know what you call tech that's past maybe its best date, but still sort of
lovely model.
Hey, I loved Evernote.
Yeah, really. There was AOL, Evernote. There's some proper old clankers in there. Good for them.
So they're going to debut on the 1st of July. So that's coming up. We also know there is a number of defense IPOs taking place across Europe. And talking about SpaceX, they're going to join the NASDAQ 100. There's going to be a couple dozen of forced passive buying there.
Well, S&P said no, right? So NASDAQ said yes, S&P said no. Is that right?
Exactly.
FTSE Russell said yes.
Did they? Interesting. Okay. All right.
Yeah. So that'll be interesting. And we know that there is an EIC defense equity call. So I think you talked about it earlier, Dan. There's going to be direct investment at the EIC for that group to take direct defense equity in companies. and they'll do a number of those. And finally, one to look out for is Microsoft. They've threatened to cut their internal Claude code use by Monday, the 30th of June. From my understanding, all their poor devs will be pushed back to whatever it is the internal tool is called.
Could be up in on Copilot. What is this? No, it's not. It's not. Gentlemen, that is it. Anything that we should have spoken about, Neil? Any questions that we should have asked you? Any inside tracks that you could give us?
Oh, if I told you, I'd have to kill you, Dan.
Oh man!
But it's going to be an exciting. It's going to be an exciting H2.
Yeah, let's go for that. I'm super bullish. What an exciting time to be alive. And thank you so much for joining us this week on Upside. Mads, anything that we should have spoken about from this week? Anything that we've missed? Any exciting plans, maybe?
Summer's coming.
Summer's here, mate. I'm
Really
so here.
is.
Ice cube in the pants, AC running behind me, a nice whir on the recording.
Enjoy.
Gentlemen,
Get the barbecues out.
let's do it. Thank you so much. We will catch you all next week.
See you on the next one.
Thanks, folks.